This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Apple shares sliding as it warns of supply constraints ahead and reports weakness in China and services. But Amazon jumps after fifth straight quarter of cloud sales growth. Asian stocks set to follow Wall Street higher after rebounding U.S. chip makers. Microsoft adding a record $450 billion to its market value. And Japan said to officially have intervened to spark the yen's biggest jump since 2023. Focus now turns to the BOJ decision and any clues on the timing of the next hike.
And I'm Haidi Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. As Shery mentioned, tech will be in heavy focus today, particularly when it comes to some of these Apple suppliers and Apple and device adjacent names trading in Japan in the Korean session, as well as we get integrated China trading as well. At the moment, though, we are seeing that buoyancy in terms of that turnaround for stocks. The Asian stocks are set to gain after the rally in the US, again, kind of holding most of what we've seen from those suspected intervention-driven gains there. Nikkei futures up about 0.25%. It is, of course, BOJ decision day. We're also seeing Kospi futures looking like a very solid bounce, but of course it has just been such a tumultuous week, peppered with some heavy losses for Korean stocks and AI, some of those chip-related stocks in particular. US futures holding gains of about 0.2%. We're seeing dollar yen at just under that 160 level. Switching out the board to take a look at what we're watching, because of course we are still continuing to watch developments when it comes to the Middle East and the US-Iran war. Oil is looking fairly steady as we head into the end of the week. New York traded crude up about 0.5%, but still prices are on track for the biggest monthly gain since March, as we've seen this re-escalation of the US-Iran war. Strikes again were exchanged on Thursday. Saudi Arabia talking about forming an alliance to try and protect navigation in and around the Red Sea region. Of course, we've seen that as a potential second front, or a new front, I should say, with the Houthi tensions in that part of the world as well. In the meantime, the IMF seeing the risk to Middle East oil shock could tip the global economy into recession. So we continue to watch for any signs of progress and how that plays through to inflationary concerns as well. Here in Sydney, we're also seeing a reversal of fortunes with upside of 1.1% indicated. Well, Apple shares under pressure in late trade after component shortages weighed on its sales forecast, but Amazon surging after cloud computing revenue accelerated for the fifth straight quarter. Let's take a look at Apple first. Our senior tech editor, Nick Turner, is in San Francisco. So tell us about the fortunes of Apple on the balance of what we heard.
Yeah, I mean, it was a disappointing report in the end. They gave a forecast that was a little bit below what people expected, and they cited supply constraints, the kind of the very thing that people were worried about in terms of it being harder to get, certainly memory chips, but also computer processors, and ultimately it added up to kind of a disappointing report.
What do we know about the China business? Because that's been a source of concern for quite some time. Are things starting to bottom out, or do we see further downside?
That was an interesting one because it's still up, and it still seems like the recovery there is proceeding. It didn't grow quite as much as what some of the analysts were looking for, and I think when the earnings initially hit, that plus slower services revenue were sort of two issues that people were concerned about. So it's ultimately, I think that recovery there still seems to be on track, and it might be the kind of thing that people aren't too worried about next quarter, say, but with everything else going on, it was sort of one more thing that was a cause for concern.
A different picture for Amazon, a fifth straight quarter of cloud sales growth. Is it widespread strength that we're seeing, or is it really kind of the support that we're getting from AWS in particular?
Yeah, I mean, Amazon really seems in many ways to sort of be the opposite of what has been attractive to Apple investors lately, because Apple's shares have been up recently because it's not pumping all this money into AI infrastructure, and it seems to be a little bit of a safer bet. Now here you have Amazon that's certainly doing that, and also giving a picture here that investors were happy with today. So it's a little hard to tell how those things, work together, but it seems like it was a reassuring message coming from Amazon.
Our senior tech editor, Nick Turner, there joining us from San Francisco. And we do have breaking news about Anthropic at the moment. They have just announced that their AI models had breached 3 different organizations during cybersecurity tests that went badly a little more than a week after OpenAI disclosed a similar incident. Anthropic now saying in a blog post that it made the discovery after performing a review of its own cybersecurity tests following OpenAI's announcement of that breach. In both the OpenAI and Anthropic tests, the AI models were able to access the internet from within testing environments that should have been sealed off. That's according to Anthropic's blog. Right, and we're reacting to big tech earnings right now. Amazon gaining in the after-hour session. Let's break down the results from this giant. Spencer Soper is in Seattle. And let's take a look at the earnings results, Spencer. And let's start with those cloud services revenue just skyrocketing. Give us some of the key takeaways first of the earnings.
Yeah, they had a big beat on their cloud computing revenue growth, so delivering a lot, faster pace of sales growth than analysts were expecting. And then you layer on top of that they're upping their expected investment this year to $220 billion. They'd initially guided $200 billion this year on capital expenditures. Now they're saying that it's going to be more like $220 billion. And so Amazon is really unapologetically putting the pedal to the metal on artificial intelligence investments and its chip investments. And so investors like what they're seeing from Amazon, even though they've been, reacted less favorably to some other companies that were like Google that were also investing so heavily.
Yeah. So what did investors like about this? How was Andy Jassy able to explain this away?
The big message that he gave investors was, look, so they the thing that might spook people was negative free cash flow. So they're putting out more money than they're bringing in, which can make people scared. But what Jassy emphasizes, look, we're building data centers from the ground up. These are buildings and structures on raw land. That's going to be good for 30 years. And then every 5-6 years, we're going to have to modernize the equipment inside them. So it's not going to be as big an expenditure to keep these facilities up to date. So what he's saying is we're looking at these really big outlays right now, but our investments in the future to keep them modern won't be as heavy. So he's kind of presenting this as like a once in a generation investment.
What about the bread and butter right now when it comes to sales through Amazon? They had their annual Prime Day as well sale in the month of June. So did we get any more insight on how they're doing?
Yeah, the core e-commerce side is doing well. The cloud computing side is most of the profit, but the e-commerce business for Amazon is still the bulk of the revenue, and that's doing fine. They gave an update about Prime Day, just saying that sales are strong. They said that people are coming to Amazon more frequently for perishables and groceries. That business is doing quite well, and that their investments in making deliveries faster is paying off. One other thing they did mention is that they got about $600 million in tariff refunds. The Trump tariffs in the U.S. were a big deal that were shot down by the Supreme Court. And so they said that they did receive $600 million in tariff refunds in the second quarter. That's the bulk of what they expect to get, and that they'll be giving refunds to consumers in some form or fashion, but given how many customers they have, those won't be very big checks per customers.
Bloomberg Tech reporter Spencer Soper there with the latest on those Amazon results. But let's turn to how the markets are doing right now. Let's bring in Bloomberg's Anthony Stevens for a check of how we might see Asia Tech also react, given, of course, the strong earnings that we got, or at least a mixed reaction that we got to those big tech earnings in the overnight session.
Had a really good time of it yesterday. It was up 5.8%, a really big pop on the month where it has really struggled. So it found its way at the 100-day moving average. And a big reason for that is kind of signs that there are buyers emerging for all the people that are cutting. And one of the important sub-stories within that is the story about situational awareness. This is a very pivotal tech fund. It's run by a guy that's not even 30, Leopold Aschenbrenner. Retail loves him, and kind of frankly, so do I. He grew a fund from like $225 million up to $20 billion at the highs. But then he experienced a huge drawdown, and Citadel has come in to buy his portfolio. That's caused a huge pop in his holdings. So double-digit pops across the high momentum space in the US. And that comes into Asia because Hynix is part of that portfolio. Hynix had a massive pop and closed at a 56% premium, the highest premium it's traded at since the listing. So things look very, very good for Asia coming into today, and Amazon kind of probably helps that picture.
What's a sort of broad read-through for risk today, though? Because after such a tumultuous week, I do wonder how well these gains are going to hold going forward.
Yeah, we are in kind of a liquidity tussle between the people who have to cut from a pure risk management perspective, and I would say Korean retail continued to do that yesterday. Korean retail was a net seller versus foreign buying, versus where is the incremental buying coming from, and what is that incremental buying going to be driven by. Amazon is a really good example of the fundamental demand for compute. They are sticking to their guns, and the market is rewarding them because they have the cash to plow at it. So for today, it looks like the fundamentals are going to override some of these technical overbought concerns, especially as the deleveraging looks to be running towards its logical end. You're hearing of big funds in the US cutting positions. You're hearing about Korean retail cutting positions. These are the parts of the investor base that people have been worried about. And the momentum trade kind of finding a level gives the fundamental buyers some comfort. But things still remain very, very kind of volatile. And the incremental news flow around China and its technological disruption will remain the key driver of markets in the back end of the year.
Bloomberg Markets reporter Anthony Stevens there. Still ahead, reports of official yen intervention putting a brighter spotlight on today's BOJ rate decision. We'll take a closer look at this next. This is Bloomberg.
Take a look at how the Japanese yen is trading at the moment, under a little bit of pressure, but still below that 160 level against the US dollar. Remember that spike of as much as 3.3% overnight. We're talking about the biggest jump in over 2 years, which led to tons of speculation. The Japanese authorities coming to the markets. A source now telling Bloomberg that yes, Japanese officials have actually intervened in the markets. And Nikkei saying that even US officials over there were doing yen dollar checks. So we are seeing potential coordination between these two big actors in the FX space, including the fact that Secretary Bessent just came out a few minutes ago saying that the yen seemed very undervalued to him in an interview with Fox Business. All of these moves, very surprising in the FX space, coming just ahead of a Bank of Japan policy meeting. So it raises a question, will this just be another routine hold, as all economists surveyed by Bloomberg had thought? Let's discuss. Economy and government reporter Yoshiaki Nohara joins us now with more here. Yoshi, what are we expecting from the BOJ when we have seen such a surprise action from authorities coming just ahead of this decision?
Good morning, Shery. It was a very unusual move by the currency authorities to step in, probably ahead of the BOJ's meeting. And today's implication is limited, probably because the BOJ was widely expected to hold the rate even before this action in the currency market. However, what's going to be interesting here is that what kind of implications this move will have for stocks as well, because stocks are in a nervous territory right now, and if stocks continue to plunge, maybe further into bear market, then that's going to add more pressure on the BOJ, maybe to slow down the pace of rate hikes going forward.
Is it too much is it going too far to think that potentially we could see a shock and awe situation like we have done a la Haruhiko Kuroda in the past, where the BOJ has surprised? I mean, we have heard from sources at the BOJ, you've talked to people that have seen potentially faster tightening?
So that's a really increasingly tricky question right now, because one of the reasons that BOJ was considered maybe thinking about faster pace of rate hikes was that, the impact of the weak yen. But if the finance ministry is taking more responsibility for that excessive volatility and weakness in the yen, that may change the, some decision making within the BOJ. But it's hard to know because the yen is still at a very low level. And if you remember what happened before with the previous intervention, the impact did not last much.
Yeah, the record intervention of more than $70 billion, right? It's interesting right now, the fiscal picture seems to be moving in opposite direction to monetary policy. I mean, we got that confirmation from Prime Minister Takaichi when it comes to that sales tax cut. Tell us the implication of this.
See, so that's also another very complicated situation shown here about how to deal with inflation. And Prime Minister decided to cut the sales tax on food and beverages to 1%, as she promised during the election campaign. So that's negative for inflation. But when you think about it, it's a traditional role of the central bank is to control inflation by raising interest rates. So, which way the government is going, more relying on the artificial measures such as tax cut and subsidies, or letting BOJ have its course and keep continuing to raise interest rates. It's a watershed moment, difficult to predict at this point, but can be both ways, or there's going to be quite a lot of tensions within the government.
Bloomberg economy and government reporter Yoshiaki Nohara there in Tokyo. Let's get some more analysis on the yen. Garfield Reynolds, who leads our Markets Live Asia coverage. We've been talking about the potential for this for some time. The timing, is this more to do with the big rise in 30-year yields that we've seen? Is it wanting to kind of maximise impact before the BOJ?
Well, I think there's been a lot of speculation that Japan would intervene at some stage. And plenty of anticipation that they would wait until after the Fed, because it'd be very hard. Imagine if they had intervened before the Fed and the Fed was hawkish, either delivered a surprise hike or sounded more hawkish than it did last time. Then, although the yen might need some help, you wouldn't get much bang for your buck. Instead, you had a Fed outcome that left the dollar exposed, left it vulnerable. So from a simple timing point of view, if you want to use a baseball analogy, they were sitting fastball, they got one, and they hit it out of the park. So they'll be happy with what they've done. You would argue, we are arguing on MLive that they need to do more one way or the other, because where it is now, it's like under 160 on dollar yen. That doesn't look sustainable, and there's plenty of skepticism leaking through in the option space. So I think at the very least the BOJ needs to talk a good game. They need to make it clear that they are willing to hike, not just sooner than is currently being priced, but they're willing to look at back-to-back hikes potentially, that they're going to shift away from this once every 6 month idea. That's not going to cut it. I do think the meeting today is live, and the BOJ's job might even be made a little bit easier by the way that equities are looking more constructive now, including there's signs that Japanese tech equities might be in a better place than they were. So there will be some pain for Japanese equities because of the yen rebounding, but they might just have to look past that in the short term.
Let's talk about the liveliness of the BOJ today. Would it really be maximum impact if they came through with some shock and awe?
Yeah, this would be the time. The dollar is having plenty of difficulties. Higher oil prices aren't helping it. The second day look at the Fed has left people more convinced that this represents from Walsh's point of view, a significant shift away from, like, they're not sure, nobody's sure if he's a dove. They certainly don't see him as being a hawk. And in that space, when you look at what's going on around the world, that makes the dollar vulnerable. So now is the time to strike again and strike hard if you're Japan, and if you get it from both sides. You've had the MOF coming in with intervention. If now you get the BOJ, like I say, at the very least, talking a good hawkish game, talking about rapid rate hikes, then you can sustainably move the yen away from that 160 level, which has been a major pain point. You can start to try and change the narrative on a sustained basis.
Bloomberg's Garfield Reynolds, who leads our MLive Asia coverage. Very, very busy day for the team, and subscribers can turn to the terminal for more on that Bank of Japan decision today. TLIV Go is your function for the latest updates, our commentary from our team of expert editors. More ahead here on the Asia Trade. This is Bloomberg. Former St. Louis Fed President James Bullard says the market reaction to the central bank's hawkish hold shows some erosion of credibility. Bullard told us more about how he viewed Chairman Kevin Walsh's news conference after the decision.
Unfortunately, I thought it was a little bit rocky. It's probably not unanticipated, given that Chair Walsh is new in the role. This is his second press conference, but I thought, the sell-off with the higher yields in the 30-year are kind of nerve-wracking for a central banker. Dollar depreciation on the announcement. I think he needed to do more to create optionality in September, and he didn't do very much of that. He emphasized the inflation target and that you weren't backing off the inflation target. Gave a little bit of a hint that, the measurement, might be a factor there. I don't think that was helpful. You might as well explain what the main arguments were around the table, because the members are going to go out and tell you what they are thinking. And basically what they're thinking is there are 2 more inflation reports to come, and we want to see those inflation reports before we get going on any kind of hiking campaign. So you might as well at least acknowledge, the contours of the argument. I understand he doesn't want to give forward guidance, but it's a work in progress, and he's very accomplished, I think, in many ways, but markets obviously didn't like this.
A work in progress implies there is some intent here. There is an objective. Jim, what do you think it is? What is the intent? What's the objective?
Well, I think he says what he means. I would characterize interest rate policy in the U.S. as being partly the Fed and partly the market. And he feels like it's become 90% Fed and 10% market. He wants that back to dial that back to 50% or something like that. And so that you can't drive either side to zero. Both sides have a role to play, but he feels like it's been too much Fed, not enough market, and maybe he's erring in the other direction now, but I think we'll get to a good equilibrium eventually.
We have breaking news out of Japan. We are getting the Tokyo CPI numbers, year-on-year growth of 2%, surpassing economists' expectations and also accelerating from the previous month. When it comes to core CPI, exclude fresh food. And for the month of July, you also have a 1.9% growth year-on-year, which is surprising expectations. Exclude energy as well, you got 2% gains. The jobless rate coming at 2.5%. That's in line with expectations, at the same level as the previous month. The job-to-applicant ratio showing a little bit more availability of jobs, 118 jobs available per 100 applicants for the month of June. All of these numbers very important because, of course, it helps the Bank of Japan decide what to do next. We already had core CPI last week, just showing the first acceleration in 3 months, sort of helping the case for the BOJ to continue tightening. Of course, if you have a tight jobs market, Haidi, then you also have perhaps more sustained wage gains, which is what the BOJ wants to see as a virtuous cycle in order to be able to normalize policy.
I was about to say it's all about this virtuous cycle, right? Particularly at a time when we're seeing the impact of the yen, and that'll be obviously something that we're watching as we go into the Bank of Japan decision as well. Whether that can kind of, in our MLive bloggers' words, to be able to kind of finish off the half job that's been done when it comes to providing a floor of support under the yen. But this is what we're watching. We've obviously got a pretty good setup potentially for most Asian stocks today, looking like a rise around the region. That rebound in chip shares fueling a rally on Wall Street overnight. So a little bit of a revival of the confidence that's really almost been shattered this week when it comes to the artificial intelligence trade. We do have that Anthropic story that we'll be keeping an eye on as well, with news that Anthropic's AI models hacked 3 organizations during tests, coming on the back of what we saw with OpenAI and Hugging Face as well. So clearly security issues remain top of mind for the development in AI. But for the broader session, we are seeing those gains coming through when it comes to last traded Kospi futures, 8%. It has been just such a roller coaster ride for Korean stocks, right? Really at the epicenter of these concerns over just the sheer amount of money that's been spent in this space. US futures holding on to modest gains of about 0.1%, Shery, but it looks like at the very least we'll end out Friday on a slightly better footing than we have been this week.
Yeah, especially when it comes to the AI trade roaring back, right? I mean, we did have a little bit of pressure for Apple, but when it came to numbers out of Amazon, also Microsoft seeing one of its biggest gains ever for a company, we have seen that upside in U.S. futures right now. But let's talk a little bit about Apple, because as I said, it tumbled in late trading after component shortages weighed on the company's sales forecast. This now signaling that the industry-wide supply constraints are taking a bigger toll than anticipated. Let's bring in Bryan Ma, VP of Devices Research at IDC. Bryan, first of all, give us your reaction to Apple's results, because it seemed to be a little bit of a mixed picture, especially when it comes to that weakness in China and services.
Yeah, they. I mean, obviously they posted some really good results. You look at the strength across the product lines, whether it's iPhone, Mac, you know, the wearables, all the other businesses, they're all doing pretty well. I think really the market's reaction right now is because of that outlook, right? There's concerns around, as you mentioned, component supply, on whether they can get, it's not just memory, by the way. You know, all this talk right now, we're talking about all these memory shortages, but the other thing that Tim Cook pointed out in the earnings call was around getting SoCs. They had under forecasted how much demand they were getting. So it's kind of a good problem to have, right? We're actually seeing, one of the interesting things we're seeing is there's this little phenomenon where people are buying Mac Minis and Mac Studios to run these agentic AI harnesses on these devices, because Macs are one of the few sorts of devices that have what's known as unified memory, where you don't have to reload the model into multiple times across the various components. And this, I think, has caught Apple off guard. And this is something where they're getting all this extra Mac demand, in addition to, of course, you know, what we otherwise see as mainstream consumers. We look at MacBook Neo. Yes, that's getting a lot of headlines, but basically there's all this Mac demand, there's extra iPhone demand. And the problem with Apple is they're like, oh man, we've got all this extra demand, but we need the parts to be able to go in there. That's, yeah, I guess it's a good problem to have, right?
Exactly. As you say, it's a good problem to have, but at the same time, when it's eating into your margins, that's really not what you want to see as a CEO. Yeah. So when are we expecting those bottlenecks to ease?
Yeah, it's going to be a challenge, at least for the next quarter. I think there was some implication on the call that this next quarter they're going to try to, you know, work through that and try to have things catch up. But they obviously weren't guiding beyond that. I think from a memory perspective, one thing that we see is that there is going to be tightness through 27 into 28. The situation, despite potential additional capacity coming on board, isn't going to change things. So as we already saw, Apple has lifted its prices on things like Macs and iPads as a result of those memory prices going up. We'll probably see something along those lines when the new iPhones launch. So we'll see how that, you know, at least that'll help to protect some of the margins. The issue, I think, you know, back to this point about the SoCs, that's the part where I think it's really just an issue of them just getting enough supply. So the good thing is, I think, to the point on margins, they did point out about the tariff refunds helping at least a little bit. So there's some of that. There's a few puts and takes that are helping to offset that. But yeah, the broader challenge is, yes, particularly with memory, we see these prices skyrocketing. that puts pressure on them, and hence why they had to raise prices for Macs and iPads recently.
When it comes to these supplies, we've been talking for a while about how the Chinese alternatives could potentially come in. Are we getting a little bit ahead of ourselves when it comes to immediate business for Apple at this point? And when could that become actually a viable choice?
Yeah, so when you look at some of the Chinese memory suppliers, there is that capacity there. Obviously, there's some geopolitical stuff that Apple needs to deftly wade through to make sure that there's no snags that they encounter in the process of doing so. But there was some implication on the call as well, too, that he didn't name CXMT, but basically that was implied, that they were looking at all sorts of suppliers to try to address this. I think if they are able to get the U.S. government's approval or blessing on this, then most likely where a lot of those will go first was probably for the domestic Chinese market. But again, let's see. I mean, I think we're still, several steps away from that.
So we have incoming CEO John Ternus now taking office, in September.
Yeah.
What are we expecting his priorities to be at a time when there's so much hardware demand, but at the same time, these bottlenecks that we're talking about?
Yeah, it's interesting. I think there's and by the way, when I look at Tim Cook versus John Ternus, the way to think of it is Tim Cook is obviously very an operational person. Ternus is a product person, and I think that Tim's not going to be going away in this transition in the sense that right now, a lot of these component challenges that we've been talking about are operational. A lot of his expertise, a lot of his smooth talking and relationships are still going to be key to this. So he's not going away. But to your question, Ternus, right? He's a product guy. He's a technical guy. One of the other big things to watch out for Apple in the upcoming quarter is how does Siri AI land as we go ahead? Is it really as good as they're making it out to be? There's obviously been some disappointment from investors and users in the past year on how Siri was supposed to turn out in the past year. So it's really, really key that they stick the landing on this. And Ternus, being a product and technical minded person, I think is the right guy to be able to make sure that, okay, this is the right user experience. This is what we want to make sure we can build out here. So that's the thing that I think that is really key to watch for. So far, I think the early reviews, some of the early beta testers around Siri AI have been, it's okay. People are saying, yeah, it does the job. And hopefully, I think the main thing is, as long as it's good enough, that it keeps Apple users within the ecosystem, potentially get some new users over, that's key, because then you've got, once you're within that Apple ecosystem, there's very little friction to just start using things like Siri AI in your day-to-day life.
I've got to be honest, I've been tempted to look at other handsets because of the AI skill set there. How do they compare?
Yeah, so that's a challenge, right? Because arguably, Apple is a bit of a latecomer to this. As you pointed out, you've got competition, not just in the form of Google and everything they're doing with Gemini on Android, and for that matter, Samsung, right? One of their key partners who's been talking about Galaxy AI. Arguably, they've been further ahead, and Apple's kind of catching up to that, right? And by the way, don't forget China. China is its own AI ecosystem, and there's a lot of talk in China right now about a so-called agentic AI phone and having things being done for you on your behalf via your assistant on your phone. Anyway, the point is that a lot of this is being developed. There's a lot of value that is being delivered from not just the Android camp and in China, but also what we're seeing with Siri AI. I think we will get to that point. I think like I mentioned earlier, the early reviews, at least, of Siri AI suggest that there is some potential. But yeah, I think that's the key, right? Can they really keep up with the competition? And to your point, is a consumer thinking, oh, hey, that Gemini, that Android product, I can do more on that. That's not the thing that, that the situation that Apple wants to get into.
Yeah, especially if you have the AI model makers like OpenAI or Anthropic actually wanting to make devices at some point. Yeah. But Bryan, really great to get your insights. VP of Devices Research at IDC, breaking down, of course, the smartphone market and everything to do with AI. This is Bloomberg.
Well, Anthropic has announced that its AI models breached 3 different organizations during recent cybersecurity tests. This news comes a little more than a week after its chief rival, OpenAI, of course, disclosed a similar incident of models going rogue. Our AI reporter, Shery joins us now for more. So, Shery, what do we know about these instances? And, of course, it just adds to these ongoing concerns that there are not enough guardrails or regulation to follow the technology.
That's right. So what we know is that after the OpenAI security incident, Anthropic launched its own exploration of whether its models had similarly escaped onto the internet accidentally. And it found, in coordination with one of its partners, that yes, its models had actually been able to reach the internet in 3 different cases involving third-party organizations and improperly look for ways to sort of do better on internal evaluations or achieve internal evaluations.
Are authorities doing anything to help them do better?
We don't know at this time. That question is out to Anthropic on if they have discussed this with government. What we do know is that regulators are paying close attention to this spate of recent AI mishaps, and many have called for either some kind of federal framework around AI regulation that would govern this, or just some sort of increased oversight. We also saw a letter from several policy organizations today calling on an investigation into the OpenAI incident.
This is becoming an issue for governments worldwide, but there doesn't seem to be a single example where we are seeing adequate regulatory guardrails that can actually contain or control the tech, right? Is there a sense that the technology has already outrun the potential for, governmental bodies to be able to control it?
Many within the AI industry and outside of it are concerned about the rate of progress that these AI models are making, and do believe that government is behind in kind of catching up to the state of the art here. We actually broke the news earlier this week that over 1,000 staffers at the top AI companies actually signed a petition calling on government to help technologists create some kind of a sort of break switch, or an ability to at least pace rather the development of AI more responsibly, more slowly if needed, given all the concern about this. So I think the fact that even people from within these top companies are raising the alarm in this manner shows the extent to which people feel that maybe we are severely underprepared for this moment at current.
AI reporter Shery there with the latest on Anthropic. Now, a Bloomberg scoop revealed how China's DeepSeek is planning a massive AI data center in the Inner Mongolia, is looking to add 1 gigawatt of compute, which would be bigger than anything currently in operation by any Chinese company. For all the details, let's bring in Bloomberg China correspondent Min Lo. Min, of course, we thought this was an AI model maker, but the fact that they're actually trying to build this massive data center, what does this tell us about the significance of DeepSeek's move?
Yeah, it's certainly one of their most ambitious projects yet. They're looking to build this 1 gigawatt data center in Inner Mongolia, which is a province in China, northwest of Beijing, in a city called Ulaanbaatar. And this city is now emerging as a national intelligent computing industry cluster because mainly of its cool climate. It has an annual average temperature of just 4 degrees Celsius. So this reduces the amount of energy needed to cool these power-hungry data centers. And according to a third-party compilation of government approvals, it seems like more than a dozen companies have invested in data center-related projects in Ulaanbaatar, including the likes of Alibaba and Kuaishou. So DeepSeek is hoping to get at least part of this data center operational by end of next year, if not by early 2028. So they plan to build their own facility, but they also plan to continue to lease additional facilities as well.
How does the size of this particular facility compare to what we know what US rivals are investing a lot in?
Yeah, it's certainly one of the biggest that China has seen, but compared to what U.S. hyperscalers are investing in, we're talking about 3 or 5 gigawatt data centers. So it still pales in comparison, and these Silicon Valley companies are still taking the lead when it comes to AI infrastructure build-out, mainly because of their access to U.S. capital markets. But still, this shows you that these Chinese firms have been able to secure sufficient financial support for these very massive investments, because according to NVIDIA's Jensen Huang, he estimated that a 1 gigawatt data center would cost as much as $50 billion. Of course, that budget varies according to the location and the types of chips used. And at this point, it's not clear if DeepSeek plans to fill the data center mainly with domestically made chips like Huawei's chips, or a hybrid of NVIDIA's and local chips. But of course, the U.S. has accused DeepSeek of illegally accessing smuggled Blackwell chips in Inner Mongolia as well.
Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. We have breaking news out of Japan. We are getting the industrial production numbers, month-on-month growth of 1.3%, which is surpassing economists' expectations, also accelerating from the previous month. The year-on-year number is also growth of 4.2%, coming off a contraction in the previous month. The retail sales numbers also in positive territory, growth of 0.5%, but still missing economists' expectations. It's also decelerating from the previous month. On a month-on-month basis is a contraction of more than 4%. Really not surprising, perhaps, that we're seeing these numbers where we are seeing that impact on households when it comes to consumption. Of course, we've had inflation continuing to accelerate. We just had Tokyo inflation numbers gaining ground for a second consecutive month. And we also had the core headline CPI last week also accelerating for the first time in 3 months. At the same time, you're getting industrial production on the factory side of things, though still potential growth on that side. All very consequential for a day when the Bank of Japan decides. Of course, we are expecting no change in the benchmark rate. At the same time, though, we had seen big Japanese yen moves that we also have to keep in mind. We're also pricing in U.S. tech results, furious recovery in the AI momentum trade. So really a lot to discuss with our Bloomberg Markets reporter, Anthony Stevens, who joins us from Hong Kong. Should I start with the Japanese yen and what potential implications this could have for the BOJ or the broader impact on stocks?
Yeah, happy Friday, Shery. It's going to be a very busy day. The BOJ is going to be very interesting because obviously it comes ahead of a weekend and there's been an intervention before the decision. So risk management becomes very key into this decision. Now, there is a lot of pressure from yields, both on the 10-year and the 30-year, for the BOJ to do something. So the market is going to be very interested about the tone of that rate rise. We have the data that's come out this morning. Japan is having a considerable turn in macro data, both on the inflation front and the consumer confidence front. So they do have the statistical ammunition to be more aggressive on the hiking cycle. Whether they follow through and kind of support the case for a stronger yen is going to be very interesting. And then after the BOJ, we have a full session to price in kind of that turn. So today's going to be busy all day on the BOJ. That's going to impact stocks as well, because you have Japan's traditional exporters trading in the opposite direction from Japan's momentum stocks. So this morning, the setup is for a lot of strength in Japan momentum stocks on the AI trade and maybe a little bit of weakness on the traditional exporters like the car makers, Nintendo and Sony.
What's the setup for tech looking at for Asia? There's a lot going on. There's $14 billion Korea plan for AI bets and the wealth fund, but then there's also the Apple supplier story to worry about too.
Yeah, the early setup for Korea, though, is absolute euphoria. You're seeing some incredible indications in the next trade, and that speaks to some of the return of the foreign buying yesterday. And also you have the Korean government stepping up here with the sovereign fund looking to invest in AI. And then you had some of those stories around kind of the deleveraging completing in the US with situational awareness and so on. So, for example, Hynix ADR is extremely strong, 56% premium, and that's a lot of strength to take into the Korean market. They will get a lot of confidence from the fact that the foreigners back this story so aggressively, but it will remain to be seen whether the technology disruption story returns next week. But for now, the flow picture has changed dramatically, with the retail deleveraging looking like it's running to a close, running in to institutional money reloading from both the domestic Korean market players like the sovereign fund or the domestic institutions, and foreign buying coming in. So today will be fascinating to watch the flows unwind in Korea to see what happens over the course of the session. Early indications, very strong open.
Bloomberg Markets reporter Anthony Stevens, as we look ahead to the market opens, we're also checking the Japanese yen because we're getting the latest line on the Bloomberg right now. We're now hearing from a source that the U.S. conducted rate checks on the yen. Of course, initially we had heard from the Nikkei that U.S. authorities had conducted that rate check on the dollar-yen levels. This, of course, coming at a time when we're seeing perhaps more indications of coordination between the U.S. and Japan. Haidi, we had heard from Secretary Bessent now saying that the yen seems very undervalued in an interview with Fox Business News. Right now, we have also just heard from Finance Minister Katayama saying that she will not comment on the intervention, but that they're always ready to respond with a high sense of urgency.
Yeah, I mean, the degree of sort of coyness that you would expect at this point, right? But the key question is really what we get from the BOJ. Is it sufficiently aggressive enough to be able to get this job done and get some sustainable impact on the yen? But as Anthony mentioned, we see that sort of roaring back of momentum broadly for Asian stocks. Obviously, Korea is going to be the outperformer there, particularly if you take a look at names like Samsung, SK Hynix. Those shares are going to rebound very, very strongly. If you take a look at that, almost, 16% pre-market trading on next trade, indicating a lot of strength. But it is broad-based. We're also seeing gains here in Australia.
This is the Asia Trade. We're counting down to Asia's major market opens in what could be a big day for the Bank of Japan. Haidi, we just got confirmation from sources that Japan officially intervened in the FX space. We saw the spike in the Japanese yen. We're also hearing that U.S. authorities also carried out rate checks. Big day for monetary policy, but also we'll probably be reacting to all of the big tech earnings as well, huh?
I was going to say, Shery, it's a big day for markets overall, right? Reacting to the downside when it comes to Apple, reacting to the upside when it comes to clearly this return of momentum. We're seeing potentially more signs of support coming from Korea as well, with quite a bit of pent-up buying there at the open, if you take a look at how futures has been trading. But also, don't forget China. We've got some growth concerns being flagged from the Politburo, and really some expectations that we'll see more official support there too.
Yeah, so no lacking of news in today's session. We're trying to digest all of it for you. Right now, you can see the market opens in Japan pointing to a little bit of upside, but not surprising if we move sideways a little bit, given that, of course, we have the Bank of Japan policy decision. Now, coming into this meeting, all 52 economists surveyed by Bloomberg were not expecting anything to happen. It was going to be a hold. But then last night, we had the speculated intervention coming from Japanese authorities. Finance Minister Katayama saying she cannot talk about intervention, but that they're always ready to act with a high sense of urgency. So the Japanese yen now holding at that 160 level against the U.S. dollar, but you can see right there we're still weakening after the spike of as much as 3.3% in the previous session. But if you think about it, going into a BOJ policy decision, does that raise the stakes for that meeting? T.S. Lombard saying that we have seen in the past intervention and then the BOJ hiking rates like it's happened in 2024. So it's become a little bit more exciting when it comes to what happens out of the central bank. JGB is holding steady at the moment. The topic's gaining ground. Take a look at how South Korea is opening because it's all about tech. As we've been talking about, of course, Apple suppliers will be key. We saw the disappointment in China services as well. We're still not seeing Samsung SK Hynix trading, but of course it's been so volatile, right? Today, we got industrial production numbers out of South Korea growing more than expected. Not surprising given the strength of the chip sector in the market, but of course, a volatility, Haidi, is what we're watching here.
Yeah, and the volatility when it comes to the continued push higher and longer term yields for treasuries as well, even as we've had now a little bit more time to sort of try and decipher the implications of the FOMC decision. We're still seeing that pressure on longer term treasury yields, fresh multi-year highs we've seen, really extending that surge that was unleashed by the Fed decision. So 2 to 5 year yields trading around 3 to 5 basis points lower in the day in late trading, but still we continue to watch the impact of that and these expectations being built, right, particularly as we have the Bank of Japan and that dollar-yen dynamic coming into play as well. Oil prices, in terms of where we're ending the week, still a bit higher. Brent crude last traded 0.7% higher, and coming online now, I should say. A bit of more of a steadying picture. It has been a volatile week, but prices are still on track for the biggest monthly gain since March as we see this re-escalation of the US-Iran war. We had the exchange of strikes on Thursday, so continuing to watch to see what the next move is and who that comes from. We are seeing a strong start to the trading day when it comes to Australian stocks, about 1% higher. Let's bring in Dilin Wu, who's a research strategist at Pepperstone. And Dilin, as Shery and I were just sort of chatting about, there's no shortage of catalysts for investors to be focusing on today. What's top of mind for you, given that we do seem to have at least that momentum coming back in a positive way?
Well, thanks for having me. And obviously, we are looking into the Bank of Japan meeting today, and we're also seeing South Korea's kind of momentum to come back. And I feel like that would be a very interesting topic to look into, because the intervention obviously doesn't work great. We are back above 160 again after the dollar-yen briefly touched 158. Intervention alone is maybe unlikely to change the direction of the currency pair, and for that to happen, the fundamentals have to change too. And right now, the fundamentals are still screaming the same thing. They've been screaming for almost 3 years. Borrow yen cheap, invest in higher yield assets elsewhere. So I feel like carry trade is just so attractive. And for South Korea, it's still all about tech and all about whether Samsung, SK Hynix, and all these kind of tech big names can give us a more sustainable growth guidance, where if more international capital would love to relocate to South Korean market again after the significant drop.
For the yen, if we do get a very assertive Bank of Japan today, this meeting, is potentially a live one. Do you think that could create a bit more sustainable support, or does it ultimately still come down to these differentials?
Well, I think that's obviously a good one. It would be obviously a surprise if we see a rate hike by 25 basis points in this meeting. But if it happens, it would be explosive. Dollar yen potentially drops several hundred pips in a single session. Carry trades unwind simultaneously across tech, crypto, and emerging market. And Asian equities face additional selling pressure as yen-funded positions get liquidated. But for dollar yen itself, I think it pretty much depends on the fundamentals and the rate differentials, because right now both conditions are quite intact in regards to the dollar yen performance. US Japan 10-year spread is still around 180 basis points. Speculative short yen positioning has actually risen beyond levels seen before the Golden Week interventions, and the market isn't scared. It's just more committed. So I feel like as long as this mid to long end spread is still there, and as long as the rate differential is still there, I think we are still very unlikely to see a sustained stronger yen in the upcoming future.
Let's take a look at some of the latest lines just crossing the Bloomberg. We're seeing dollar yen rising 0.5%. We're now above that 160 level now. We're hearing from Japan's currency chief, Nomura, speaking in Tokyo, saying that there have been voices of concern over the recent weakness in the currency. They're responding to concerns and anxiety over the recent yen levels. At the same time, though, we are just seeing a blockbuster start to trading when it comes to Korea. The Kospi jumping at 1.14%. SK Hynix, Samsung on the back back of the numbers this week, up more than 25%. So clearly we've reached a point after the 3 days of the frenetic sell-off in Korea where bargain hunters are resuming and coming back in. But if you take a look at just how bad this rout was, just how many sort of longer-term trends were broken, longer term, are we going to continue to see that volatility for this trade?
Well, I think the immediate trigger of this sell-off in the South Korea was SK Hynix earnings. Record operating profits up by 557% year on year, and the stock fell over 9% on the same day. And that tells you everything about where expectations were sitting. The market wasn't rewarding this high profit surge. It was punishing the gap between actual and forecast. So when the bar sets that high, every extraordinary, beat can also turn into a sell-off. And I think going down the road, it pretty much depends on two things, on whether the sell-off will continue, where we can find a potential rebound. So the first of all is whether the AI demand story gets reconfirmed, and the second is the leverage cleanup. So now over 1.2 million margin accounts received calls in July. So that is a huge kind of hit to all the retail investors. And the thing I watch most closely is foreign flows at the moment. Foreign investors were key buyers during Kosti's rally earlier this year and have reversed course aggressively. So SK Hynix ADR trading below its issue price 2 weeks after listing is a direct signal of how this kind of international sentiment has shifted. So for the index to find a durable bottom, I feel like you need to see foreigners to stop selling and probably to start buying again. So that would be something I will look closely into for the upcoming weeks.
Dilin, we're seeing, of course, with that big move in Korea, the Korean Exchange has activated the sidecar mechanism to halt a KOSDAQ program buying. So it looks like it is just another frenetic session when it comes to Korea. Japan, the Nikkei also rising 2% there as well. I wanted to also get your views on China, because obviously this has been the contrarian play that has turned into what's been the fundamental catalyst, sort of disrupting these other AI-heavy markets, right? Do you see further opportunities when it comes to the landscape for AI in China? Are they better than for Korea or Japan or Taiwan, for example?
Well, I've seen many of the traders saying that China's accelerating memory expansion could challenge the pricing power of Samsung, SK Hynix, and Micron, to name a few. But in fact, many have attributed much of the recent sell-off in memory-related stocks to concerns over China's rising competitive threats or advantages. But I personally would argue it's more complicated than that, because in the short term, what we're seeing is mostly a market reaction driven by sentiment, I think. A real shift in competitive landscape usually takes much longer to play out. And in the near term, concerns about a potential DRAM or DRAM oversupply have spread across the sector, from memory chip makers like Samsung, SK Hynix, to Japanese and Taiwanese semiconductor equipment companies in the broader supply chain. At the same time, renewed Fed hike concerns, combined with recent AI breakthroughs from Chinese companies like Moonshot AI and Alibaba, have made Chinese tech stocks look more attractive. But if we look at, CXMT's IPO more closely, the picture is actually more mixed, and institutional demand was relatively modest compared with some other recent stock market listings. So, for example, CXMT's 570 times oversubscribed, while some recent IPOs saw demand exceed 5,000 times. So that suggests professional investors are being more cautious or being more conservative than retail excitement might suggest. And the company itself warned its prospectus that the market could weaken if AI investment slows or if competitors expand capacity too aggressively. So personally, I see this recent price move as more of a sentiment-driven correction rather than a fundamental reset of the industry landscape. And the competitive threat is real, but I mean, it's a multi-year story than a near-term story.
Dilin, always great to chat with you. Dilin Wu, who's a research strategist at Pepperstone, on a very, very busy start to trading here in Asia. More ahead on the Asia trade. This is Bloomberg.
Take a look at how the Japanese yen is trading at around that 160 level against the U.S. dollar after we saw that massive spike yesterday, 3.3% gain. We had seen a little bit of weakness since then, but sources now telling Bloomberg that Japan officially intervened to bolster the currency and that the U.S. has conducted rate checks, signaling the possibility that we're seeing more coordination between the U.S. and Japan. Secretary Bessent actually in an earlier interview with Fox Business saying that the yen seems very undervalued to him. Remember, the last time that we had a rate check from the U.S. was back in January. All of this coming at a time when we do have the Bank of Japan policy decision. The currency chief of Japan, Atsushi Mimura, also coming out saying that they're actually just responding to concerns and anxiety over the recent yen levels. Chief Asia FX and rates correspondent Ruth Carson joins us now with more. I mean, this is quite a surprising move in the FX space, just hours ahead of the BOJ policy decision, right? How are traders positioning into this central bank decision?
Absolutely. It has definitely been a surprise. And in some aspects, you know, traders that I've been speaking with, fund managers, had expected, in fact, for Japan to have moved earlier. So for this to happen overnight, so close to the BOJ meeting, I mean, look, I guess that's the whole idea about the element of surprise as well. As for trader positioning, I think the trading action, even over the past 12 hours, sheds a bit of light about the pressure that still faces the yen. Remember, following the intervention, we saw dollar yen fall below 158. And if you look at where we are right now, it's just under 160, around the 160 mark. And that's 12 hours into after the intervention. So what does this tell us? More pressure ahead for the yen for all the reasons that we know. Rate differentials, BOJ seen behind the curve, and just traders being bearish on the currency for all the reasons above.
U.S. Treasury Secretary Scott Bessent said in an interview with Fox Business that the yen is, quote, very undervalued, that he believes excess volatility is not healthy. How does that sit with the market view?
Yeah, so if you talk to people on the street, there is definitely a consensus that the yen is cheap, no doubt about it. You know, before the intervention, around the 163 per dollar level, absolutely, it looks cheap. So there's definitely truth there. The question is, would you dare to buy the currency because rate differentials are still wide with the US, and in fact, with the developed world, the BOJ still seen as needing to hike rates, which is why a lot of hedge funds are still willing to sell the yen, and the carry trade using the yen as the funder is still an incredibly popular strategy in a $9.5 trillion a day currency market. So Bessent there making his comments, absolutely they ring true. But the question is, you know, when the fundamentals are still pointing towards a weaker yen, expect to see more shorts build up. And we have seen that with dollar yen now back around a 160 level.
I mean, I'm seeing such a wide range of forecasts right now that I'm even afraid to ask. But what are strategies saying at the moment about where the yen goes?
Yeah, that's the crystal ball question, isn't it? Like, where are we headed? Because we know that Japan is definitely ready to intervene when they see it is needed. So if you look at FXFC Go on the terminal, some of the most bearish forecasters are seeing the yen at 165 per dollar by the end of this year. But that said, if you look at what options markets are showing us, traders are assigning a more than 30% chance that dollar yen trades at 170 next year, by the end of next year. So that's, more than 10 round yen numbers here, by the end of next year. So again, intervene, don't intervene. At least for the moment, investors are still willing to sell the yen.
Let's see what the BOJ can come through with today. Bloomberg's chief Asia FX rates correspondent Ruth Carson there. Well, speaking of central banks, the Bank of England keeping interest rates on hold, but warning that the Middle East conflict continues to pose risks to the inflation outlook. Governor Andrew Bailey told us more about how policymakers are navigating that uncertainty.
There are two things I think that shape my thinking, certainly. One is obviously is the one that's shrouded in so much uncertainty. It's where are these events in the Gulf going to go to? And then the second question is, for any sort of given set of events, how are they going to feed through into domestic inflation? Now, we start in a position where it's come in lower than we thought it would. We're below where we thought we would be if you go back to April. But you can't take too strong a message from that in terms of second round effects going forwards, because frankly, this is a very unprecedented situation.
Governor, if you look at market bets, they reduced bets on a hike in September. We're now at around 33% chance. Yeah. Are you content with that?
I think the market pricing is sort of sensible.
So that's where you would lean towards.
The reason I say that is because when we survey the market, what the market tells us is that their sort of, if you like, their central expectation is for no change. But then they say, yeah, but there's a risk on the upside. And you can see that built into market pricing. And I think that, as I said in the press conference earlier, I think that fits with the fact that we've got three scenarios. We've got less probability attached to any one of them, frankly, than we probably normally would. But the adverse scenario is further away from the centre than the lower scenario. And the adverse scenario basically is a scenario which says if this breakdown of the ceasefire continues as a permanent thing, then we're going to have higher energy prices, and that will have an effect.
But, Governor, we've also seen some new language, right? So the 6 members who held rates said the policy strategy could change if upside risks to inflation were to subside. So can you tell us a little bit more about that?
Yes. So I think if, however, we were in a position which we were when we started the meetings for this round, where the memorandum of understanding and the ceasefire was holding, and we had crude oil price, I think, briefly down to somewhere not much above $70 a barrel. It's a bit higher than it was before the conflict, but not a lot higher. Then, yes, I think we're looking at a different situation. Now, sadly, of course, that hasn't held.
But that's very unpredictable at the moment, or
yes.
Are you expecting? So it could flip. And what happens if it flips from one to the other?
Well, I think there's two things going on. So if we got into a situation where the ceasefire is in place again, I don't think it's unreasonable to think that whether they come down as much, we'll see, but they come down again. But then the problem we've got is the sheer unpredictability of this, because this is what we've learned again in the last week, 2 weeks, 3 weeks.
Governor, your central projection shows unemployment peaking around 5.5% in 2027, a rate that we hadn't seen since 2015. A weaker labor market is helping, of course, to contain the second round inflation. Yeah. But at what point does it cost in terms of jobs?
Well, I think we are seeing softness in the labour market. We are seeing something of an output gap opening up, and that is reflected in the labour market. So I think it's exactly consistent with what you say is in the projections. Obviously, we don't want to see that happening. And one of the things I would say is that we don't have a dual mandate, and I like our mandate. What our mandate has in it, though, is what we call trade-off language, which is we've had another negative supply shock. Pushes prices up, activity down. Our job is to return inflation to target, but that language, that trade-off language, gives us some flexibility as over what period we return it to. We obviously have to look very carefully at things like inflation expectations, but it is in our mandate, and I think we must use that where we think it's appropriate to.
You've met with the new Chancellor. Do you think your mandate could change under this Prime Minister?
I've had no discussions on that at all, so I don't think that's anything that we should speculate about. I've not had that discussion.
I know you don't like talking about fiscal policy, but what does the uncertainty of the budget in autumn mean for the next couple of months?
Look, honestly, I don't go into this autumn in any different position than I normally do. Well, I know there's going to be a budget towards the end of the autumn, because that's the way the UK cycle works. And so we condition our monetary policy decisions on announced fiscal policy. We'll do the same again.
Bank of England Governor Andrew Bailey there with Bloomberg's Francine Lacroix. More ahead on the Asia trade. This is Bloomberg.
Take a look at how Korean assets are trading. We're seeing big upside for the Kospi in a very volatile market already. Of course, we had that plunge earlier in the week just to gain ground right now on government promises, further stabilization of this market. We have seen big gains and losses for Samsung, SK Hynix. We're seeing now Samsung gaining 19% after plunging about 15% or so earlier in the week on the Tuesday session. Same for SK Hynix, back and forth. It's a seesaw for these stocks, especially after they reported Haidi pretty strong earnings, revenue and profits just multiplying from the previous quarter, but still very, very lofty expectations that need to be met.
Shery, let's take a look at some of the other global headlines that we're following today. And U.S. Treasury Secretary Scott Bessent says he's spoken with the Chinese Vice Premier He Lifeng ahead of Xi Jinping's visit to Washington. Bessent says the discussion touched on flashpoints, including rare earths and agricultural exports. According to Chinese media, He Lifeng also expressed serious concern over recent U.S. measures. President Trump has recently unveiled new import duties as he seeks to rebuild his tariff wall. Well, President Trump says his US-led Board of Peace has reached a deal to disarm Hamas and other armed groups in Gaza and establish a new Palestinian government. Trump posted that the plan will be implemented in phases, with Israeli forces withdrawing after disarmament and an international force helping maintain security. Israel and Hamas have not publicly confirmed that agreement. More ahead here on the Asia Trade. This is Bloomberg.
Tech stocks leading the gains in the Japanese markets today. We are seeing the equity session with Nikkei up, gaining 5% right there. One of those big movers is Advantis. Of course, the semiconductor supply chain right now roaring back to life as we have that trade in the overnight session with Wall Street, with the Philadelphia Semiconductor Index seeing its best day since April of 2025. But at the same time, of course, we're also watching what's going to happen with the Bank of Japan, especially given that we saw that huge spike in the Japanese yen, as much as 3.3% at one point, seeing the best day in over 2 years. Now, sources telling Bloomberg that Japan has officially intervened in the markets and perhaps even signaling coordination with the U.S. apparently having conducted rate checks. Joining us now to discuss all of this is Sayuri Shirai, former BOJ board member and now professor of economics at Keio University. It's always great to have you on BOJ Day. I mean, coming into this decision, all economists surveyed by Bloomberg, more than 50, had said this is a hold. I was expecting a very boring meeting. Has this become exciting all of a sudden because of the yen spike last night?
Yeah, I think, there will be no change with regards to policy rate, but, because of this possible intervention, slightly yen is appreciating now to 160. So everybody will ask, question to Governor Ueda. And also people may ask about, Bank of Japan's view with regards to Prime Minister Takaichi's recent, expression embedded in the Honebuto report about, they want low interest rates. So a lot of questions will be, asked to Governor Ueda today.
I mean, you make up a good point because we're seeing fiscal policy taken by Takaichi's administration going in opposite direction of what the BOJ is trying to achieve right now. When it comes to that temporary sales tax cut on food and soft drinks, what are the implications down the line for what the BOJ might have to do?
But BOJ is really dilemma. They understand current level of yen is still extremely cheap. This is consistent with, Ministry of Finance and Katayama's view. And, they are hoping to, raise interest rate, to the extent it is possible. So it's better for, Prime Minister Takaichi's administration not to talk about it. But I think, they are very clear. They want to have a low interest rate, and then yen's depreciation is not so bad thing. So here is a complicated, mutually inconsistent statement. I think this is one of the issues we are facing right now.
Are we going to see more volatility as well in the JGB space? I mean, bond traders have not liked what they're seeing in terms of fiscal concerns.
Yes. So recently, Takaichi finally made it clear that she's going to cut the food-related consumption from 8% to 1%, not to the 0% she promised during election campaign, because a lot of supermarkets cannot accept the number 0, so 1%, but she will do supplementary measures. So there will be a big fiscal spending. So everybody now want to know how she's going to finance. So far, she has never made clear how she's going to finance it. She keeps saying she's not going to rely on the JGB issuance. So I think market is closely watching. Also, she made a, she said economic growth strategy, and a lot of investment will take place. Again, we don't really know how she's going to finance. So I think we have to wait and see what she will say with regards to source of financing.
No wonder perhaps the Japanese public is not really understanding what her priorities are. We have seen her polls sink here in Japan as well. And the fact that we're seeing this immense pressure on Japanese households, it was surprising to me as I was breaking news earlier today as well. The retail sales were under so much pressure, especially on a month-on-month basis. We're talking about a contraction more than 4%. Industrial production is fine. The factory side of things, the business side of things seems fine. But tell us a little bit about the broader health of the Japanese economy when you consider the individual households.
Yeah, actually, a lot of households are very unhappy. Also, nominal wages are growing at 3% right now, and because inflation is, a little lower than 2%, because of a lot of subsidy given by government. But a lot of people feel their lives are getting harder. So people really want to have this food-related consumption tax cut. But there's a growing, criticism also within the ruling party, and also a lot of economists and so on. They criticize this tax cut is not a good thing because of the a lot of spending we need to do for social security. But public does not understand why they are suffering quite a lot. Why people are against this tax cut? So here is a very big frustration among public about what is the government want to do. And I think tax cut is quite important right now. But again, it's also financing, and then public do not understand well. What are the discussion? They really want tax cut right now.
The weak Japanese yen seems to be discussed a lot here among households, just people spending money out there, feeling that import prices continue to rise, that everything is more expensive. Did it make sense for Japanese authorities to intervene last night?
I think so. They took advantage of the fact that dollar index was dropping, partly related to the FOMC Kevin Walsh, statement that rate hike is not necessarily the option for FOMC. So I think Ministry of Finance and Katayama took advantage and tried to try to raise the yen's appreciation. That is good, but still again, Takaichi's administration appears to understand that yen's depreciation is not so bad because it related to the profit of the export sector, foreign asset are boosting because of yen's depreciation, and so many inbound tourists coming. So if we look at such kind of side, there are a lot of positive side, right? Also, especially the Japanese government tax revenue is growing thanks to the inflation and yen's depreciation. So here's again, it's not clear. That Takaichi-san appears to want to have a yen's depreciation, but the Ministry of Finance and Bank of Japan worry about yen's depreciation. I think they have to make it clear what they like to do.
How much do you think are U.S. concerns weighing on the Takaichi administration that potentially wants a weaker yen, and yet you have Secretary Besson coming out in media saying that the yen is very undervalued?
Yeah, so Besson always, I think he understands the intervention is not a good option. And also, it's Japanese foreign exchange intervention will be related to the selling of U.S. Treasury securities. So it's not very good for U.S. I think Besson really want Bank of Japan to normalize monetary policy. But he often said, for example, in May statement, Besson said, as long as independence is given to the Bank of Japan, I expect Bank of Japan will do the right decision. This is very unique, unique statement. So I think Besson kind of understand there's a lot of, conflict of view within the Takaichi's administration.
And we know that reflationist member Asada, for example, in the June meeting when they hiked, he dissented. So what are you expecting to see in terms of how united this board is at today's meeting, and what could it signal for the pace of hiking?
At this moment, when we look at the number of the people, board members, small dissent is possible, but it's not going to have any impact on the overall decision. I think it's more about the relationship between Bank of Japan and Takaichi-san's administration, how they view about this rate hike. So I think the dissent is at this moment it's not very big issue. Probably in the next year, when we see a greater number of changes among board members, that may become more crucial. But at this stage, I think relationship between Bank of Japan and Takaichi's administration is more important.
Sayuri Shirai, really good to have you back. Former BOJ board member and professor of economics at Keio University. Of course, as we head towards that Bank of Japan policy decision that you can actually follow live, TLIV Go. You can get that function, get analysis from our expert editors, and some more context and perspective of this very crucial meeting coming up. And it's a very busy day across Japan because we're also following some of these tech stocks. I mean, we've seen this huge rally when it comes to the tech sector in Japan, everything to do with the semiconductor supply chain, anything to do with the AI trade. And you can see SoftBank gaining more than 14%. We're reacting from big tech earnings. On the other side of the world, we had those losses for Apple, but gains for Amazon. Big day for Microsoft as well after the earnings earlier in the week. We continue to watch what that means for the Asia supply chain here. We have more ahead. This is Bloomberg.
Well, South Korea plans to inject nearly $14 billion into its sovereign wealth fund for strategic investments in AI, data centers and infrastructure. The move expands the fund's mandate to include domestic assets for the first time, following a rout in technology stocks. Let's bring in Bloomberg's Haram Lim for more. So explain what the government is trying to do here. And it's a pretty big change in terms of that change in the mandate.
Sure. Yeah. So the Korean government was initially trying to set up like a separate entity of fund that could actually lead this kind of investment. But after their consideration, they thought they would just embed a new account to the already existing Korea Investment Corporation, which is the nation's sovereign wealth fund. So they are going to inject about $14 billion in this new account that will be wholly dedicated to investment that is really centered around this AI ecosystem, such as AI data centers and software tech like infrastructure. so on.
Yeah, structurally, it's interesting, right, in terms of what it means for some of the existing constraints on KIC. What does it sort of ultimately mean in terms of implications?
Right. It is a huge move. If this realizes, it is going to be a huge change for Korea Investment Corporation. Currently, Korea Investment Corporation manages the nation's foreign exchange reserves, mainly in almost all of it in foreign assets and in foreign currencies. But if the government pushes ahead with this plan and allows goes through with the revision of the law, and if that happens, KIC will have a dual mandate, not only to invest in like foreign assets like they used to do, but also to the domestic assets that will be heavily centered around AI ecosystem.
And as we speak, it's a day where the Kospi has soared as much as 15% after a week that saw steep 17% losses. So given that this announcement comes on the back of what has been a pretty historic week for Korean equities, it's difficult to not make the connection here.
Right, exactly. This announcement was released this morning, and this week has been a historic rout of volatility in the Korean market. It is hard to link directly this measure to the government's aim of stabilizing or the market or something like this, but we cannot ignore that it came amid the market chaos. And the government did also mention in the statement that in the long run, the Korea Investment Corporation's domestic investment could have some stabilizing impact in the asset market in the long term, similar to the National Pension Service when they sell off or buy assets, it's being a whale to the Korean markets. If KIC goes through with this whole process and then starts investing in domestic core areas, it would definitely have a long-withstanding impact on Korean asset markets, including the stock market as well.
Right. Bloomberg's Haram Lim there with the latest on South Korea. China's leaders are signaling greater concern about the economy, but stopping short of the large-scale stimulus measures many investors were hoping for. The China Show co-anchor David Ingles joins us with more from Hong Kong. So, David, we're seeing these signals from the Politburo on how concerned they are about growth. Bond markets reflecting this with a massive move.
They did. So the readout finally came out, and I think the timing was also quite interesting because it came out right before the close of cash markets yesterday. So you did see some reaction across markets. You mentioned bond markets, and I think there was an acknowledgement of the weak macro stopping short, in some ways underwhelming market expectations. So you did see, of course, this is the bond futures right now, did see that spike once the headlines came out. The opposite is true when you look at the 10-year bond yield that's coming up too. So we fell from about, I think it was 174 to about 170, 171 on the 10-year bond yield. So we'll watch this very closely. Now, just to also mention, when you look at what happened in the stock market, and just flip the page, please, as well, have a look at how we did on the Chinex index, for example, in the afternoon session, and the bounce. And I think Haram did a very good job of just underscoring a lot of the major themes we've been talking about, right? So it's hard to draw a direct connection on the intervention front between, say, the yen and Japan, in that case, Korea and the stock market, or the won, which is part of the conversation, or even China and their role in boosting and supporting their stock market. But it's hard to ignore the timing of all these things. And that afternoon bounce that we saw, including, by the way, and these are some of the ETFs tracking some of this tech-heavy benchmarks, did see a surge in some of these ETFs in a turnover going into the close. So it's, I guess, hard to ignore some of the signs out there, but of course we don't know any confirmation whether or not the national team was in fact in the market to support prices. Let me just end on this as we wrap up Friday, and we'll get a better sense of the economy. PMI is coming out today. And I guess this goes back to market expectations around the Politburo, because when you look at the AI, this K-shaped recovery in China, right? The AI story, and how that's really moving exports, and factory orders are full. We'll get a better indication of that with the PMI numbers coming through as well. Maybe that's why we're not getting that big bazooka, perhaps not just yet. That's a question mark. And as far as markets go, we are actually on a decent run, 5 straight weeks now if things hold. MSCI China over the S&P 500, and you need to go all the way back about the start of 2025 to see a similar streak of that length. So it's extremely busy as we go into the Friday session here today. Back to you guys.
Yeah, happy Friday, David Ingles there. We'll be looking forward to the China show, of course. But for now, do stick around with the Asia trade. We have more. This is Bloomberg. Take a look at some of the big movers when it comes to the Japanese and the Korean session. You can see right there that the Nikkei is gaining more than 4%. Big moves on SoftBank, big moves on Advantest, all to do with the semiconductor supply chain. The AI trade roaring back in the Wall Street session. We had the Philadelphia Semiconductor Index seeing its best day since April of last year. You can see the Kospi also, woof, the jump of more than 14%. Samsung, 21%. But remember all of the volatility that we've seen with both Samsung and SK Hynix, which take up about half of the Kospi. So we have seen the government try to really calm investors, saying that they will put measures in place to contain the volatility, Haidi. But at this time, we're seeing broad upside being led by tech.
Yeah, we're continuing to follow that tech theme, right, when it comes to the other corporate headlines that we're tracking. Meta is one of them. Shares falling 8% after the company disclosed close to $700 billion in future AI-related spending commitments. A regulatory filing also shows another $347 billion in lease obligations not yet on the balance sheet. It follows a disappointing quarterly revenue forecast, stepping up pressure on Mark Zuckerberg to show benefits from Meta's massive investment in this AI race. Bloomberg has been told that assets at Leopold Aschenbrenner's hedge fund Situational Awareness have fallen to about $10 billion after Citadel acquired much of its public stock portfolio. Sources say that's down by more than half from recent months. We're told the fund began liquidating some of its equity positions after suffering losses in the recent AI stock rout.
And Haidi, Qualcomm CEO says the company's exposure to China is similar to that of its rivals. Cristiano Amon told us how deals with Chinese and U.S. hyperscalers will help the company meet its revenue targets.
The most important milestone for us right now, I think, look, we outlined that we build a roadmap that has products coming over a couple of years, right? We've been very clear how the roadmap is evolving. So the first set of revenues, which actually is the majority of the $5 billion that is happening right next year, it's a custom ASIC with 2 hyperscalers. Everybody asks us about who they are. The only thing I can say at this point is one in the United States, one in China. But the most important thing is when you think about the composition, the $15 billion, it has custom ASIC, but it has our accelerator, has our new high bandwidth compute, which is a new memory architecture, and it has our CPU. So the exciting thing is we're going to have in a couple quarters, we have, progressing with the development. In a couple quarters, we'll have silicon on the HPC that we're going to make people will be able to evaluate, I think, the performance claims. And I expect that is actually going to create even more interest than what we have today within the $15 billion.
Cristiano, the way that I look at Qualcomm as well, like on the smartphone side, Android in China, and then when I'm thinking about the data center, I'm trying to understand where the biggest opportunity is. So geographically, China or US, and then there's ASICs or your own products. Try and put them in order for me of priority.
Yes. When we provided the $15 billion number for fiscal 29, it's kind of well balanced across, custom ASIC with hyperscalers. It's especially for new entrants, you should expect a lot of bespoke development. It's very well balanced on the CPU, which will start ramping in 2028, and the accelerator in HPC. But when we talk about HBC and the accelerator, HBC is actually part of some of custom ASICs deployments as well. As far as China, you should expect that our exposure to China, the data center, will be very similar as a percentage of data center revenue to all of the other semiconductor providers that are in the data center business today. You know, China it's a big market. It's just a function of GDP, and when you look at some of the data centers, especially the providers of custom ASIC, they have exposure to China. Ours is going to be about the same percentage.
Qualcomm CEO Cristiano Amon there speaking with Bloomberg Tech anchor Ed Ludlow, and tech and the AI race continues to be front and center as we head toward the start of trading in Greater China. Some of those comments from the Politburo signaling, yes, there is, of course, existing concern over the economic growth trajectory. Some of these questions over sort of just how much these national AI champions and these adjacent stocks are going to be supported in terms of the national team action as well will also be in play. But, of course, a pretty strong uplift that we're already getting in the markets that are online. Record intraday gain for South Korean stocks after what was like a 17% decline over the past few days. And broadly, we are seeing the region trading higher. We're also watching the Korean won at the moment. We're hearing reports of the conducting of a dollar-setting forex intervention on Thursday, according to Reuters. This on the back of suspected yen intervention on BOJ decision day. This is Bloomberg.